Good morning, traders. So I know I get a lot of questions about hedging and how do I do hedging, things like that. Well, it's very nuanced, depends on the size of your account, what your opinions of the market are, etc. But I do want to walk you through a hedge that I'm going to do a final adjustment on here today and just show you how this has progressed over time. So I put this trade on all the way back in June, and it was put on at 124 days out. So anyhow, as we look at this, I put it on. It does have some risk to the upside, but it's carrying negative delta at the start. And of course, if it's a hedge trade, I want it to maintain negative delta throughout the duration of the trade. Otherwise, it's really not going to act as a hedge to me. So nothing was really done on this trade for a couple weeks. And then here, I'll move this out of the way. Our market had run up quite a bit. I didn't want that much risk to the upside. I ended up just kind of rolling this up, and that reduced my downside risk, also reduced my upside risk because I took in a little more premium by moving this spread up. Then, so this is the fill on July 12th. Then on August 4th, similar thing. Our market had continued to run up, and I did essentially the same type of move. In this case, I stripped out an entire butterfly. We can see that right here, that I just thinned the trade a little bit. Then we get to August 17th. And kind of a similar sort of move, just a little more thinning. Our market was pulling back a little bit at that point. But you can see I'm reducing my risk to the downside here as we go, trying to keep this delta neutral to negative delta. Ideally, I want negative delta in there. And then we get to September 13th, got some decent negative delta. Market's pulling back. I thinned this trade out a little bit more, just kind of capturing profit as I go. And then we get to September 21st. Well, the market had pulled back fairly significantly by then, and it pulled back to the point we can see this solid blue line. I am no longer negative delta. I am positive delta. Well, that's not where I want to be. So I needed to do something to bring in negative delta again. So I dropped this leg down, which put me back into a negative delta situation. So here we are on September 21st, nice negative delta situation. Then the market sold off a little bit further, or excuse me, market didn't really sell off a little bit further. In this particular case, time elapsed. I always lay an order out there to thin these, and that order hit, thin this out. And I was in this position as of September 29th. That is the position that I am currently in. So what I want to do now, let's come and take a look at this in its current configuration. Because right now it's a little bit positive delta again, and that's because our market has sold off. And again, I really don't want to be in a positive delta situation in a hedge trade. I've got 30 days left to go on this trade. Today's October, well, actually 2nd, so I've got 29 days left to go on this trade. And I'm up nicely in it. It's about 3,500 in profit, 3,600. So I could close this thing out up 55%, lock in my profit. But I'm going to look at a slightly different approach. Again, the goal behind this is to be a hedge. And I'll also say that one of the benefits of doing these is that I can turn them into a black swan type of trade. Now, I can do that at a couple different levels. We're coming into October, of course, which October tends to be a little more volatile. Historically, we've got some sizable sell-offs in October. So it'd be good to have a black swan hedge on here. Now, I could leave this trade like this, just stripping out these strikes, leaving my long 2 puts in place. I could do the opposite here, do something like this, which of course I don't want because that leaves me significant upside risk still. That's not what I want. So basically, if I take out these 2 here, these 4 here, close up those, leave these long 2 puts in place, if this trade expired here, I would still end up with a roughly $1,000 or $800 in profit. which is nice. Put on a hedge, have insurance, and get paid to have that insurance so long as you manage this through this process. I don't know that I necessarily want or need quite that much insurance on this because I do have other hedges going here too. So I might sell off one of those. That essentially then gives me about $2,300 in profit if this decays here. If we do in fact get a sell-off here in October, this could escalate significantly in price. But worst case scenario, absolute worst case scenario, the market rips up from here, the market stays here and decays, this trade will close out at about a $2,200 profit. So that's going to be my move on this trade today. I'm going to work to get this configuration stripped out of it. Again, I don't chase these. I'll just place out a GTC order. I'll probably do it in two orders. In fact, I'll go ahead and just do the first one here right now. So I will, first of all, just strip out a butterfly and turn it into this configuration. Then after I get that butterfly stripped out, I'll come back and pull out the spread here, leaving me with just one long put down here at 1690 in the rut. And then that will have a black swan hedge on it at that point. Let's just go ahead and see if I might get a quick fill on this. Probably not, but 38.75. I'm going to go out. I can shop this for the day. There's nothing urgent here, so I'm going to just put that order out there at 39. And let's see. We'll leave that as a GTC. I would expect I'll get filled today. I'll work to get filled today. But just going to leave that out there for now. And then when I get filled, I'll pull that other spread out. And then I will have a black swan hedge that I got paid to put on. So just wanted to share that, run through that with everyone. And again, these are kind of nuanced. There's not a set specific formula, but knowing how to have the concept of these, model them, play with them yourself for whatever your need might be is kind of the key here. Let's see, I did just have a fill come through. Was that? Nope, not this one. All right, take care.